Good day to each and everyone. My name is Georgeline Bukirin from the SBA FM2, and I'm the first reporter of this group, which is Group 2. The title of our report is Banking Supervision and Examination. What is banking supervision? It is the act of monitoring the financial performance and operation of bank in order to ensure that they are operating safely and soundly and following rules and regulation. Banking supervision is the one that monitor all the financial performance and operation of bank to know if the bank operates it well. Banking supervision involves examining the financial condition of individual banks and evaluating their compliance with their laws and regulations. Bank supervision is conducted by governmental regulators and occurs in order to prevent bank failures. Bank supervision is conducted by government. It means that it is handled by government regulators to ensure the financial stability of economic and prevent bank failures in the country. Purpose of examination and supervision. The first purpose of examination and supervision is to find out whether banks are doing their business in conformity with the banking laws and that of the rules and regulation of the central bank and other government agency. The first purpose is to ensure whether the banking is doing the responsibilities and follow the banking laws and the rules and regulation of the central bank in the country. The second is determine how soundly the bank financially in terms of asset and property. Examination and supervision also determine how was the bank financially in terms of asset and property. Because we all know that asset and property is the main concern of all Filipino, so that the central bank conduct an examination and supervision in an individual bank to keep the safety of the asset and property. The third is examination is more for discovering the unsound and unsafe practice and to offer remedies or solution for such practice. Examination is conducted also to know the activities of regular banks and make a recommendation or a solution for it, because we all know that some of the individual banks have an issue or problems with regards to their banks. The next one is banking supervision in the Philippines. The Philippine banking system. The Philippine banking system is made up of four types of bank, which is the commercial banks, further subdivided into universal and regular commercial banks, thrift banks, and rural or cooperative banks. These banks are differentiated according to size of capitalization and type of activities that they may undertake. In terms of capitalization, universal bank and regular commercial banks have a minimum required capital of 4.9 billion and 2.4 billion. Respectively, thrift banks with head office in Metro Manila has 325 million and thrift banks with head office outside Metro Manila has 52 million. For rural bank or cooperative banks, the required minimum capitalization ranges from 2.6 million to 20 million, depending on the type of city or municipality of it. In terms of allowed activities, universal and regular commercial bank can accept drafts and issue letters of credit, discount and negotiable promissory note, drafts, bills of exchange and other evidence of indebtedness, receive deposit, and buy and sell foreign exchange. In addition, universal banks are also allowed the activities of investment houses, invest in the equity of companies engaged in business not related to banking, and owned up to 100% of the equity of financial allied undertakings other than commercial bank. Thrift banks, on the other hand, are allowed to accumulate savings of deposits and, together with own capital, invest these deposits in retail loans or finance home building and home development and others. They are also expected to provide short-term working capital and medium and longer-term financing to business. Lastly, rural banks or cooperative banks, aside from accepting deposits, are expected to make credit available in less urbanized areas at reasonable terms. These loans and advances are primarily for meeting normal credit needs for farmers, fishermen, cooperatives, and merchants. Legal framework. Republic Act Number 7653, the new Central Bank Act 1993, Consolidated Supervision, General Banking Law of 2000, which is risk-based approach to supervision. Republic Act Number 7653, as amended, otherwise known as the new Central Bank Act of 1993, authorized the Bangko Sentral ng Pilipinas to exercise supervision over the operation of banking institution and quasi-bank, including their subsidiaries and affiliates engaged in allied activities. This provide the legal basis for the implementation of consolidated supervision. The adoption of the risk-based approach in the conduct of banking supervision, on the other hand, is supported by General Banking Law of 2000, Republic Act Number 8791. Consolidated supervision. The implementation of consolidated supervision was driven by the emergence of complex banking groups and mixed conglomerates controlled by a few affluent families. It was observed that certain structures were resorted to in order to benefit from regulatory arbitrates and gain ready access to low-cost funds for the family business groups against the backdrop of an underdeveloped domestic capital market. Consolidate supervisions also, the Bangko Sentral initially adopt a gradualist approach in affecting the shift to consolidate supervision and the risk-based approach, cognizant of the importance of managing change and ensuring sufficient buy-in of major stakeholders involved. Moreover, it was clear from the start that full adoptions of consolidate supervision and the risk-based approach called for improvement in data collection, an almost total overhaul of supervisory processes and procedures, and the paradigm shifts in the mindset of bank supervisory staff. The last posed the greatest challenge as the exposure of a large number of the more senior supervisory staff had been to compliance-based supervisions. The Bangko Sentral first started to move in the direction of consolidate supervision in 1998 by adopting a common cut-off date for examinations of bank and their subsidiaries and affiliates. However, the examinations were only loosely coordinate. It was only in 2005 when the supervisory approach to banking groups was formally integrated, and the pace of change has since rapidly picked up. Risk-based approach to supervision. Risk-based supervision features a balanced complementations on site of examination and off-site monitoring. The examination procedures, on the other hand, have been improved to support the adoptions of risk-based supervision framework. This started in 2005 when the Manual on Supervision and Examination of Banks was revised to conform to the risk-based approach with the help of technical assistance from the United States Agency for International Development or USAID. The development of the manual was done simultaneously with the implementation of a technical assistance from First Initiative that aimed to develop a sustainable and relevant formal foundation training from program for BSP examiners. Risk-based supervision features a balanced complementation of on-site examination and off-site monitoring, an effective off-site monitoring mechanism that yields an update assessment of the changing risk profile of a banking unit or group serves as a valuable input to the scoping and planning of an on-site examination. On the other hand, a report of examination that is completed and shared shortly after an on-site examination, one that it will written and clearly presents major supervisory conclusions, contributes significantly to the preparation of an updated assessment of bank risk profile. The independency and close coordinations of work unit discharging those separate tasks should serve to foster teamwork and build mutual trust. So this is all about my report, and thank you for listening.
Good day everyone, I am Rachel May Aleta, the next reporter. In the next slide, it talks about in the internal requirements for the risk-based approach to supervision, data collection and storage that under financial reporting package, data warehouse system, and informal arrangements with financial regulatory agencies. Under financial reporting package, as far as data collection and storage is concerned, a new financial reporting package was crafted that is consistent with the Philippine Accounting Standards and Philippine Financial Reporting Standards. In 2005, the Philippine Accounting Standards and Philippine Financial Reporting Standards was amended to fully align with the International Accounting Standards and International Financial Reporting Standards for enhanced financial transparency. The financial reporting package, submitted electronically, is meant to facilitate gathering more relevant data leading to improve and timely analysis that will support the supervisory process. In data warehouse system, a data warehouse system has also provided ready access to all supervisory data by authorized personnel and brought ease in doing vertical and horizontal analysis of data, peer group comparisons, and trending. Examiners or analysts may perform such analysis using a comprehensive pre-programmed bank performance report or do independent data mining. In informal arrangements with financial regulatory agencies, in the very near future, reporting banks will be provided web-based access to their own data relative to aggregated peer data for value-added and better quality control. Formal as well as informal arrangements for information sharing with other financial regulatory agencies such as Securities and Exchange Commission, OIC, Philippine Deposit Insurance Corporation within the Financial Sector Forum Mechanism has also yielded more comprehensive information about complex banking groups that has contributed to fostering seamless supervision. Next is overhaul of the examination or off-site monitoring processes. Report of examination, an integral part of the record of decision, and CAMEL's method for implementing the rating system for banks. It is a rating system used 6 categories to assess a bank's strength. It is a capital adequacy, assets, management capability, earnings, liquidity, and sensitivity. Risk-based supervision features a balanced complementation of on-site examination and off-site monitoring. An effective off-site monitoring mechanism that yields an updated assessment of the changing risk profile of a banking unit or group serves as a valuable input to the scoping and planning of an on-site examination. On the other hand, a report of examination that is completed and shared shortly after an on-site examination, one that is well written and clearly presents major supervisory conclusions, contributes significantly to the preparation of an updated assessment of bank risk profile. The interdependency and close coordination of work units discharging those separate tasks should serve to foster teamwork and build mutual trust. The on-site examination assumes a different focus from a compliance-based exercise to one that puts emphasis on the soundness of governance and risk management and the effectiveness of the audit function. Its conduct entails reliance on enhanced analytic skills and judgment calls of examiners. The method for implementing the rating system for banks, known as CAMELS, has likewise undergone review to reflect the new approach. Moreover, examination teams are now expected to discuss more candidly with banks how ratings were determined. For off-site monitoring, the challenge is to be able to identify sources of potential threats to financial and reputational soundness. Critical thinking abilities and sound judgment skills are very crucial. Bank supervision staff assigned to do this task need to alert higher management of what he perceives as potential threats, based on all available information. As the central point of contact, he is also expected to thoroughly understand and be updated on the business of a bank. These assessments are synthesized in an institutional overview document that is updated on a quarterly basis. Next is skill sets and training. The supervision has underscored the need for new skill sets other than what had been traditionally identified as accounting and auditing skills. These are being developed through in-house structured training programs and specialty courses designed with the assistance of outside experts provided through technical assistance from the IMF founded by the Japanese government. First initiative administered by the World Bank and United States Agency for International Development. All supervisory personnel are required to go through these continuing training programs. A major objective of the technical assistance is also the development of in-house trainers from the supervisory staff to facilitate mass training at affordable cost. The in-house training programs are complemented by sending selected staff to external training courses provided by foreign governments, especially those with well-developed supervisory practices, as well as the BIS and regional organizations like Southeast Asian Central Banks, the Executives Meeting of East Asia and Pacific Central Banks, and SHENSA stands for Southeast Asia, New Zealand, and Australia Banking. The BSP has also strongly encouraged and subsidized the acquisition by staff of international certification for relevant skills such as Chartered Financial Analyst, Certified Internal Auditor, Professional Risk Manager, Financial Risk Manager, and Certified Information System Auditor for IT examiners. It has also been sending staff, including lawyers, to universities for graduate and postgraduate education in relevant fields supporting the expanding requirements of banking supervision. The hiring policy for supervisory personnel has been expanded as well to be able to take on new talent from disciplines other than finance and accounting such as statistics, economics, mathematics, and operations research. However, Even as BSP has invested heavily in developing its human resource in banking supervision, it has also to deal with the challenge of retaining its staff. With their more advanced skills, they have become more attractive to foreign banking supervisors, international accounting firms, and private industry who themselves are after the same skill set. Next is the reorganization of the BSP supervision and examination sector. The BSP supervision and examination sector, headed by a deputy governor, is the specific component of the BSP that is responsible for carrying out its responsibility from bank supervision. The supervision and examination sector is in the process of completing a deep and sweeping reorganization to effectively implement its risk-based supervisory approach. Under the reorganization, the old setup of self-contained end-to-end supervision and examination departments assigned to banks by general type is being replaced with a setup that features specialist organizational formation built around the major bank supervision processes and held together by overall supervisory relationship management teams in charge of major banking groups and/or as diversified portfolio of financial institutions. The new supervision and examination sector is divided into four major subsectors. First is to provide sufficient controls and accountability over specific activities in the supervision process. Second, specialization and focus in highly technical areas. Third, consistency in the interpretation and application of supervisory policies and rules and regulation. And fourth, timeliness in the submission of reports of examination and accomplishment of critical supervision tasks. The new setup better recognizes the specialized requirements of troubled banks with a view to their early resolution. At the same time, for the broader population of normally operating financial institutions, the setup allows the highly flexible, dynamic, and scalable application of risk-based supervision methods through the coordinated efforts of off-site relationship managers for continuity and on-site examination terms that bring together various specialist skills depending on the risk profile of target financial institutions. Appropriate technology has also been adopted to maximize supervision efficiency and knowledge sharing. The system benefits from a supervisory data warehouse environment that centrally collects and processes all incoming supervisory financial and non-financial data, and make this available to examiners, analysis managers on online depending on security clearance. Next is other supervisory tools. To complement the improvements in its on-site examination practices, the BSP has also enhanced its other supervisory tools, specifically those for off-site surveillance. For example, the use of bank performance report system has been very useful in monitoring the financial performance of supervised entities in between on-site examinations. The bank performance reports contains in one compact report key performance indicators that support scammer soundness analysis. The BSP is also using a statistical model, the Bank Early Warning System, that generates 1 year ahead forecast of key bank performance variables, especially solvency and asset quality. The output of Bank Early Warning System is used to help prioritize on-site examinations and validates judgmental assessments of bank condition. An examiner resource scheduling system is under development and will be deployed in 2008. It utilizes network flow programming and other operations research techniques to aid management achieve optimal solution to the following challenges. First is, how can examiner resources be efficiently allocated in ensuring the best fit group of examiners is deployed to each bank according to risk profile? And second, what is the appropriate deployment schedule that balances need for timely examinations, continuous examiner training, scheduled leaves, natural personnel movements, as well as personal emergencies and other contingencies? In the next slide, on 2002 IMF assessment on the Philippines' compliance with the Basel Core Principles for Effective Banking Supervision, Supervision revealed that although compliance overall is quite high, important gaps still existed. These gaps include, among others, strengthening the legal protection for supervisors, formalization of information sharing and cooperation with other local and foreign supervisory agencies through other mechanisms, improving the conduct of consolidated supervision and the examination procedures, enhancing the framework for prompt corrective action and problem bank resolution, and the application of appropriate standards for banks' risk management systems. In legal protection for supervisors included in proposed revisions to BSP Charter, certainly a lot of things have happened since then, although the revisions to the BSP Charter have not been enacted yet. The strengthening of legal protection for supervisors is one of the proposed revisions currently being deliberated in Congress. Meanwhile, case law upholding the supervisory powers of the BSP has also steadily built up. Formalization of information sharing and cooperation with local and foreign financial supervisory agencies. There is already a formal platform for information exchange and cooperation among the local financial supervisors through the Financial Sector Forum. As to information exchange arrangements with foreign supervisory agencies, the BSP has formal agreements in place with 5 foreign supervisory agencies and is negotiating with 7 others. In the conduct of consolidated supervision and bank examination, the BSP Supervision and Examination Sector reorganization also intended to support consolidated supervision. One of proposed revisions to BSP Charter is the grant of authority to BSP to look into banks' non-allied subsidiaries and affiliates. BSP has started operationalizing consolidated supervision since 1998. This was followed by a massive reorganization of the BSP to support the practice of consolidated and risk-based supervision. However, admittedly, even with the seemingly extensive coverage of BSP supervision over banking groups, it is constrained by its charter and the banking law to supervising and examining only those subsidiaries and affiliates that are engaged in allied activities. There is no provision for obtaining information from non-allied affiliates or the possibility of looking into the operations of these firms even if there is enough reason to do so. Greater flexibility in these areas is in the list of proposed revisions to the existing BSP Charter. In the interim, cooperative arrangements in the context of the Financial Sector Forum have provided an adequate workaround to these constraints. The examination procedures, on the other hand, have been improved to support the adoption of the risk-based supervision framework. This started in 2005 when the Manual on Supervision and Examination of Banks was revised to conform to the risk-based approach with the help of technical assistance from the United States Agency for International Development. The development of the manual was done simultaneously with the implementation of a technical assistance from First Initiative that aimed to develop a sustainable and relevant formal foundation training program for BSP examiners. The focus of the training program was the conduct of risk-based examination. Hence, pilot risk-based examinations were conducted starting in 2005 and became a venue for BSP examiners to apply what they have learned from the training program. Now, full risk-based examination is being done on all banks.
Good day, my name is Quinette Dilaxi, and the third reporter of Group 2. And my report is Development in Compliance with the Basel Core Principles for Effective Banking Supervision. So, what is the BCP or the Basel Core Principle? BCPs are the globally recognized standards for sound prudential regulation and supervision of banks and banking systems. It is to assess the quality of banking supervision and the effectiveness of supervisory systems and practices. Under this, compliance development is the framework for prompt corrective action and problem bank resolution. PCA framework reviewed and enhanced in 2006. This new framework now communicates to the supervised entities in clear terms in when and how the BSP will deal with potential problems in bank operations, in order to prevent more serious problems from arising that would necessitate more drastic measures. procedures already in place for financially distressed banks, but application is hampered by absence of coercive legal instruments. It is the reason why the proposed revisions to the BSP Charter include provisions that would give the BSP more powers to effectively carry out problem bank resolutions in a timely manner. PCA essentially involves the Bangko Sentral directing the board of directors of the bank, prior to an open outbreak of crisis, to institute strong measures to restore the entity to normal operating condition within a reasonable period, ideally within 1 year. So here's the next one. Appropriate standards for banks' risk management systems. The BSP also formally implemented it. The following supervisory guidelines on risk management have already been issued and implemented. Risk management of financial derivatives, internal risk rating systems, market risk management, liquidity risk management, IT risk management, and supervision by risk. Issuance of these risk management guidelines aims to complement the risk-based supervisory framework being implemented by BSP. It also aims to instill in banks the discipline of critically examining the risk exposures. So what is the risk-based supervisory framework or the risk-based supervision that the BSP implemented? The risk-based supervision allows banks to take risks so long as the banks demonstrate the ability to manage and price for those risks, and treats banks differently depending on each bank's demonstrated ability to manage risk. It does not penalize well-managed banks by making them operate under standards designed to keep weak, poorly managed banks solvent. So the first risk is risk management of financial derivatives. Derivatives is broadly defined as a financial instrument that primarily derives its value from the performance of an underlying variable. A bank may engage in authorized derivatives activities provided that the bank understands, measures, monitors, and controls the risk assumed from its derivatives activities, provided that the bank adopts effective risk management practices whose sophistication are commensurate to the risk being monitored and controlled. Lastly, maintains capital commensurate with the risk exposures assumed, and the bank may likewise engage in financial derivatives activities in accordance with these guidelines. Next is the internal credit risk rating systems. It is the practice of mitigating losses by understanding the adequacy of a bank's capital and loan losses reserves at any given time. It is the process that has long been a challenge for financial institutions, but banks who view this as strictly a compliance exercise are being short-sighted. The next is market risk management. It encompasses the risk of financial loss resulting from movements in market prices. Banks are expected to have an integrated approach to risk management to identify, measure, monitor, and control risks. Market risk should be reviewed together with other risks to determine overall risk profile. The next one is the liquidity risk management. The role of this risk is to prospectively assess the need for funds to meet obligations and ensure the availability of cash or collateral to fulfill those needs at the appropriate time by coordinating the various sources of funds available to the institution under normal and stress situations. However, regardless of its size and complexity, a bank must be able to identify, measure, monitor and control its exposures to liquidity risk in a timely and comprehensive manner, and maintain structurally sound funding and liquidity profile. Banks shall likewise hold liquidity in accordance with the minimum requirements set by the Bangko Sentral. The next one is IT risk management or information technology risk management. The guidelines on ITRM keep abreast with the aggressive and widespread adoption of technology in the financial service industry and consequently strengthen existing Bangko Sentral framework for IT risk supervision. It should be considered a component and integrated with the institution risk management program. Technological developments also enable greater access to financial services that promote an inclusive and responsive digital financial ecosystem. Lastly is the supervision by risk. It is intended to provide more consistency in how the risk-focused supervision function is applied to these risks. The Bangko Sentral will review the risks to ensure that a bank's internal risk management processes are integrated and comprehensive. All banks should follow the guidelines in the risk management efforts. The next topic is the adoption of international standards. Aside from striving to be aligned with the Basel core principles for effective banking supervision, the BSP has also been keeping pace with developments in international standards for capital regulation and accounting practices. The BSP has actively monitored the crafting of the Basel II standards from the time the Basel Committee first issued the first consultative document in 1999. So in 1999, first consultative package was issued. In 2000, first quantitative impact study or QIS. In 2001, CP2 was issued, and also in 2001, QIS2 and QIS 2.5 was issued. In 2002, QIS3 with 6 Philippine banks are issued, and in 2003, the third consultative package was issued. And finally, in 2004, the final document is released. By 2010, the advanced approaches of Basel II may already be allowed for purposes of computing banks' capital requirements. The timing is dictated by the adequacy of available data. The BSP also adopted the Philippine Financial Reporting Standards and Philippine Accounting Standards, which are patterned after the revised of International Financial Reporting Standards and International Accounting Standards issued by the International Accounting Standards Board. The adoption of the new set of accounting standards has been aimed of enhancing fairness, transparency, and accuracy in financial reporting. In banking supervision in the Philippines, enhancing corporate governance is needed. Redefine duties and responsibilities of banks' board of directors, and adoption of fit and proper standards for bank officers. The fit and proper standards is the standard in corporate governance of financial institutions. Most financial supervision organisms include these requirements in the regulatory frameworks to ensure that institutions have a prudent and solid management. The next one is strengthening anti-money laundering regulations. Money laundering means it is the illegal process of making large amounts of money generated by a criminal activity, such as drug trafficking or terrorist funding, appear to have come from a legitimate source. First, customer identification requirements. It means identifying the customer and verifying his or her identity by using reliable independent source documents, data, or information. Second, the KYC programs compliant with BCBS standards. KYC means Know Your Customer. The Know Your Customer rule essentially states that every broker-dealer should use reasonable effort when opening and maintaining client accounts. It is a requirement to know and keep records on the essential facts of each customer, as well as identify each person who has authority to act on the customer's behalf. BCBS means Basel Committee on Banking Supervision. It means that the KYC or the applicants or clients need to pass the requirements based on the standards of BCBS. With improving skills and supervisory capacity, the BSP has more confidently pursued a targeted developmental agenda to promote further development of the Philippines' financial system while maintaining prudential standards. These initiatives includes capital market development through contributions to foreign exchange liberation, domestic bond and derivatives market development, and payment systems upgrade. Second, enhance access to banking services by the poor through sustainable microfinance practices of banks and innovative deployment of mobile banking services. And lastly, promoting financial literacy. The BSP also prioritized in its legislative advocacy the establishment of a comprehensive credit information system through enactment of the Credit Information System Act, the modernization of the payment system through the Payment System Act, and the reform of the bankruptcy framework through the Corporate Recovery Act. Also supports various capital market development-oriented bills such as the Personal Equity Retirement Act, which promotes private long-term saving for retirement income augmentation.
Good afternoon, I am Malapit Mariateris F, who will discuss what is external supervision. External supervision. The external supervision comes from the agencies of government and it is not in any way connected with banks management. This is done to ensure that they conduct their business properly and lawfully, meaning to say, the one who handle external supervision are the agencies of government to ensure that they conduct their business properly and lawfully. In the Philippines, the supervision and examination sector of the Bangko Sentral is charged with responsibility of conducting spot and regular checks on all bank institutions. It is therefore a vital arm of the Bangko Sentral. Meaning to say, even though that it is not connected to the bank's management, the external supervision is responsible of conducting spot and regular checks on all bank institutions, so that the external supervision is a vital arm of the Bangko Sentral. Also, it says there that the deputy governor and the staff by the examiners and other administrative personnel are the one who headed the external supervision. Now, let's go on to the major functions of sectors. And it is the charting of banks, supervision and examinations of banking and other non-banking financial institutions. But first, what is provision? Based on the Wikipedia, provision means the action of providing or supplying something for use or an amount or thing that's supplied or provide. In the first box, it is the Sector 25 Supervision and Examination. It is written there that the Bangko Sentral shall provision over and conduct periodic or special examination of banking institutions and quasi-banks, including their subsidiary and affiliates engaged in allied activities. At the Sector 26 Bank Deposit and Investments, it is written there, any director, officer of stakeholder who, together with related interests, contract a loan or any form of financial accommodation from his bank or from a bank, which is subsidiary of bank holding company of which both his bank and the leading bank or subsidiaries, or in which his controlling proportion of share is owned by the same interest that owns a controlling proportion of shares of his bank in excess of 5% of capital and surplus of the bank, or in the maximum amount permitted by the law. In Sector 27, there are four provisions. First is an officer, director, lawyer, or agent stakeholder subject to provision by the Bangko Sentral, except non-stock savings loan association or provident fund organized exclusively from the employees of the BSP. Lastly, borrowing from an institution subject to provision or examination of the BSP shall be prohibited unless they said borrowing are adequately secured or fully disclosed to the Monetary Board may prescribe. At the Sector 28, Examination and Fees, it is written there that the supervising examining department head, personally or by the deputy, shall examine the book in every banking institution once in the 12 months, and such other time as the Monetary Board, by an affirmative vote of 5 members, may deem expedient, and to make a report to Monetary Board. In the Sector 29, Appointment of Conservator, it is written there that the conservator shall report and to be responsible to the Monetary Board, and shall have the power to overrule or revoke the action of the previous management and the board of directors of the bank or quasi-bank. In Sector 30, Proceeding in Receivership and Liquidation, it is written there that it will occur when the MB finds that a bank or quasi-bank is unable to pay its liabilities as they become due, has insufficient realizable assets as determined by the BSP to meet its liabilities. In Sector 31, Distribution of Assets, it indicates there that in case of liquidation of bank or quasi-bank, after payment of the cost proceeding, including reasonable expenses and fees of the receiver to be allowed by the court, the receiver shall pay the debts of such institution under order of the court. In Sector 32, Disposition of Revenues and Earnings, it indicates there that all revenues and earnings realized by the receiver in dwindling up shall be used to pay the costs, fees, and expenses mentioned in preceding section, salaries of such personnel whose employment is rendered necessary in the discharging of liquidation, together with other additional expenses caused thereby. Section 33, Disposition of Banking Franchise. It indicates there that the BSP may, if public interest so requires, award of institution, upon such terms as the Monetary Board may approve, provided that whatever proceed may be released from such award shall be subject to the appropriate exclusive disposition of the Monetary Board. In Section 34, Refusal to make report on permit examination, it indicates there that any officer, agent, manager, and etc., subject to provision or examination by the BSP within purview of this Act, who willingly refuse to file the required report or permit any lawfully examination into the affairs of such institution shall be punished by the fine not less than 50,000 or not more than 100,000, or by imprisonment of not less than 1 year or not more than 5 years, or both, in discretion of the court. In Sector 35, False Statement, it indicates there that the willful making of a false statement or misleading statement on a material fact to the Monetary Board or the examiners of the BSP shall be punished by a fine not less than 100,000 or not more than 200,000, or by imprisonment of not more than 5 years. In Section 36, Proceeding upon violation of this Act and other banking laws, rules, regulations, orders, or instruction, it indicates there that whether a bank or quasi-bank or any person or entity willingly violate this Act or other permanent laws enforced by BSP, or any rules issued by the Monetary Board, this act will be punished by a fine of not less than 50,000 or not more than 200,000, or by imprisonment of not less than 2 years or not more than 10 years, or both. Lastly, the Sector 35 administrative sanctions on bank and quasi-banks. It indicates there that without prejudice to the criminal sanction against the culpable person provided in Section 34, 35, and 36, the Monetary Board may, at its creation, impose upon any bank or quasi-banks, their director or officer, for any willful violation or its charter by law, willful delay the submission of the reports or publication thereof as required by law, rules, and regulations.
Good day everyone, I am Apple Jane Ursula and I'm going to tackle the mechanics of examination. Mechanics of examination. The term examination shall refer to an investigation of an institution under the supervisory authority of the Bangko Sentral to determine whether the institution is operating on a safe and a sound basis. The Bangko Sentral ng Pilipinas is the one who supervise and examine over the operation of different banking institutions and non-bank financial institutions in the Philippines. They make sure if these banks are capable in inquiring into its solvency and liquidity. Also, to assess the effectiveness of its compliance function to ascertain that it is conducting business in accordance with laws and regulations. Examination by the Bangko Sentral. Regular or periodic examination shall be done once a year with an interval of 12 months from the last date thereof. Special examination may be conducted earlier or at a shorter interval when authorized by the Monetary Board by an affirmative vote for the 5 members. Examination by the Bangko Sentral of institutions shall be complemented by overseeing. It refers to limited investigation of an institution or any investigation that is limited in scope, conducted to inquire into a particular area of an institution's operations, provided that a specific authorizations be issued by the Deputy Governor of the appropriate sector of the Bangko Sentral and periodic summary reports on overseeings conducted be submitted to the Monetary Board. The scope of examination. It is consistent with a risk-based approach to supervision. The scope of examination may include, but not be limited to, the following. First is the appraisal of the overall quality of corporate governance. Second, assessment of the risk management system, which shall include the evaluation of the effectiveness of management oversight and self-assessment functions, such as the internal, audit, risk management and compliance, adequacy of policies, procedures, and limits, effectiveness of risk measurement, monitoring, and management information system, and robustness of internal controls. Third, review of the institution's operations and overall risk profile. Fourth, evaluation of financial performance, capital adequacy, asset quality, and liquidity. And last, any other activity relevant to the above. The scope of examination is the basis of BSP in terms of examining and supervising banks and non-bank financial institutions to make sure that banks are capable of continuing its operation. Next is the conduct of examination. The conduct of examination shall include, but not be limited to, the interview of any bank directors, officers, and personnel, and the verification, review and evaluation of documents and records, including making copies of the records, taking possession thereof, and keeping them under the custody of the Bangko Sentral after giving proper receipts thereof. For this purpose, records shall refer to information whether in its original form or otherwise, including documents, signatures, seals, text, images, sounds, speeches, or data compiled, recorded, or stored as the case may be, first, in written form or any material, second, on film, negative, tape or other medium so as to be capable of being reproduced. Third, by means of any recording device or other electronic device or process. And regardless of whether this information are stored and kept by the Bangko Sentral supervised financial institutions. Records shall also include audio, photographic, and video evidence of events, acts, or transaction of the BSFI. The records are the proof that banks are examined and supervised by BSP. It is also the basis that banks are still capable to work and process according to their types. Refusal to permit examination, any act of omission that impedes, delays, or obstructs the duly authorized Bangko Sentral examiner from the conducting an examination of a BSFI, including the act of refusing to accept or honor the letter of authority to examine presented by the examiner of the Bangko Sentral, shall be considered as a refusal to permit examination. The refusal of the banks to permit examination is reported by the Bangko Sentral examiner to the head of the appropriate supervision department of the Bangko Sentral, who immediately make a written demand upon the banks concerned for such examination. If banks still refuse the said examination without any satisfactory explanation of a report on such refusal must be submitted by the Bangko Sentral examiner. Ang mga bangkong tumatanggi sa pag-i-examine ng kanilang pag-aari ay may karampatang parusa. Ito ay ang sanctions. Sanctions, a bank that willfully refuses to permit examination shall pay a fine of 30,000 per day from the day of the refusal and for as long as such refusal lasts, without prejudice to the sanctions under Section 34 of Republic Act No. 7653. The fine will be imposed starting on the day following the receipt by the concerned head of the Supervision Department of the report from the Bangko Sentral examiner that the bank who continues to refuse to permit examination notwithstanding the written demand made by the department head. Aside from the fine mentioned above, the bank and its concerned directors and officers may be subject to non-monetary sanctions provided under Section 37 of Republic Act No. 7653 or the new Central Bank Account and Section 002. Next is the mechanics of bank examination and banks institution. So bank examiners examine banks' books at any time during banking hours. Examiners takes control of the bank's books and documents which are owned by the bank or pledged by debtors as collaterals. Analysis involves the classification of assets as to quality, valuation, and assurance that everything is in order. This would lead to the conclusion on how efficient the management is and on how effective the policies are. If there are any violations, immediate steps are suggested and are taken up to correct the bank position. So these are the embezzlement, defalcation, peculation, and examination. When we say embezzlement, it's taking of funds that belongs to the depositors and customers. So when a person uses funds for a different purpose than they were intended to be used, for example, in banks, employees or officers who handled money might create bills and receipts for activities that did not occur and then use the money paid for personal expenses. Next is defalcation, the misappropriation of funds which belong to stockholders. It means misappropriation of assets or theft of assets by employees or officers of a corporation. Next is the peculation, all kinds of embezzlement, defalcation, or misappropriation of funds. So it means to take dishonestly the money or public funds or the property entrusted to that person. Ibig sabihin, lahat ng iba't ibang paraan ng pagnanakaw na pag-aari ng bangko. Letter D, examination, the review and analysis of assets and liabilities of banks. So to determine their existence, values, and true ownership, and to ascertain that everything in regard to said asset and liabilities is in order. So the causes of peculations is first gambling.
it is simply a recreation, then it becomes a habit, and finally a status symbol that must be maintained. Second, pride and envy. A man working in a bank consumed by a pride and envy will do most everything to get even. Third, living beyond one's income. Keeping up with rich neighbors and thus spending well beyond one's income could also lead to embezzlement. Fourth, unsound salary policies. Due to rising prices without commensurate salary adjustments may invite one to commit peculation. 5. Poor employee relations. Officers may look down on their subordinates and even go to the extent of emphasizing this cleavage between them in public places. And last is the immorality. Bank officers and employees are not free from temptation to commit crimes against morality. So we have here the preventive measures. The most effective prevention against speculation is the establishment of a sound and adequate internal controls. To be effective, it should compose of two parts. So the first part is setting up procedures where the work of one person should checked and proven by another. Adapting a system where an entire department or section should not be under the complete control of one person, but rather that another person should exercise the right to approve and also to prevent any person to have custody and control over any of the major subsidiary accounts. Next, the second part is the use of daily proof sheets, periodical statement reconciliation of accounts, reports, and similar activities are the objects of this piece of internal control. So the second part constitutes of procedures and routines to determine that the work performed balances and that everything is in order in relation to the general ledger accounts. So that's all.